They can print more dollars, they can print more euro, and thereby manipulate supply and demand. If you get margin called, you're a shit trader. There are no fat traders in the top 1% of traders. News is not fundamentals. News is sentiment. You shouldn't be trading without a stop loss. You shouldn't negotiate your stop loss. I look back on data, but I don't back test.
Hi guys, welcome to On the Couch with Justin and Andrea. If you click on the description below this video, you'll have a look at all the questions I'm going to be asking Justin today. Let's get started. I believe you signed some new contracts with your funding partners, and I'm very curious to know a little bit about that, and I'm sure the viewers are too.
As you know, I am funded by 3 separate prop firms currently working with a 4th that I'm about to get funding with. I'm also funded with a financial institution. I trade off book for them, and I've just received new contracts. It must be, I'm guessing, some kind of legislative change that is happening, because in the same day I received pretty much the same kind of wording in my contracts from all of my funding partners, and it's something that's going to make me promoting and marketing the Money Tribe pretty challenging. I'm not allowed to disclose my relationships anymore. I'm not allowed to show my trading accounts. I'm not allowed to show screenshots. I'm not allowed to post my trades. I'm not allowed to show where I'm mapping my trades. I can't even show my trades after the fact. Basically, it's a confidentiality agreement, a whole new confidentiality clause that basically prohibits me from, even with you as a third party, sharing anything that's inside of my accounts. And so I don't know if all funded traders are getting this, or it's something that's just come down on me because I'm getting a lot of funding at the moment. But this is what came across my desk in the last 24 to 48 hours. And so now Darby, Chris, Laura and myself are having to sit and figure out how do we promote the Money Tribe without me actually talking about trading and showing my trades, because, you know, podcasts like this are great because I can talk about the general concepts of trading. But if I get into the actual trades that I'm taking, if I get into any specifics, if I show any screenshots, if I show any account information, it literally is a breach of confidentiality, and so I would lose my funding. So I have to literally rethink everything that I'm doing on social media.
I know this might be a stupid question to some people, but is the funding more important, or is what you currently built?
No, absolutely the funding. I mean, the Money Tribe is worth nothing to me financially. The trading is where my money is. So, you know, obviously I'm going to protect that first. I have to protect it first. I've got no other choice.
So your advice to traders is normally stick to one strategy, okay? But when should you quit a trading strategy, and what signs would indicate that your current strategy is not effective?
There is only one sign that will be an indication of whether your trading strategy is not effective. And that is if you have stuck to that strategy with absolute discipline, executed it perfectly the way the strategy was intended, and you have no variables in that other than the strategy. And if the strategy didn't work over many trades, and you can see that it has a higher loss rate than it has a win rate, then you should start looking at another strategy. The thing is, most people are not failing because of bad strategy. They're failing because they don't have the discipline to implement a strategy and the discipline to execute on a strategy exactly as the strategy should be. So I'll give you a great example. If one of your strategies involves trading above the moving averages and involves trading with an RSI between 50 and 70, which by the way is one of my trading setups, and one of the strategies is to trade on an engulfing setup, but to wait for the engulfment to happen and for the candle to close. If you go and execute a trade before the candle closed, maybe it was even 2 seconds before, 3 seconds before, 10 seconds before, if you just did one thing that wasn't absolute in the trading strategy, you can't then come and blame the strategy. You have to look at it as a discipline issue and not a strategy issue. And most people don't have a strategy issue. They have a discipline issue. If you look at most strategies, even the worst strategies are going to at least win some of the time, if not a decent percentage, enough to put you in a win over time. That is not what's failing people. What is failing people is the discipline of executing strategy to the letter.
How do you develop and test the strategy before you adopt it?
Well, I think developing strategies is is an art. I think it's something that you either have a natural talent for it, you either have a very strong affinity for numbers and patterns and understanding the market, or you develop your strategy by looking at other traders, finding out what they're doing and taking their strategies and maybe adapting it to your trading style. In my case, I happen to be a very good pattern finder. If you go back into my business history, if you go back into my career history, everything I have done has been around data analysis and finding patterns within the data. Okay? So for me, developing a Forex strategy, and my strategies are completely unique, they're not borrowed from anyone else, they're not stolen from anyone else, they're not copied from some book. It is strategies that I've developed based on what I saw in the market by going back and studying historical data and finding patterns that jumped out at me. Now, for a lot of people, they will look at data and it's just mumbo jumbo. A lot of people look at charts and they won't see a pattern. I have a very natural affinity for seeing those patterns. If you look at quants have a very natural affinity for numbers, quantitative trading. And so they will look at the data sets and they'll develop strategies and theories based on that data set. But it all comes to one simple thing. You have to look back at history to understand what has the market done. Because what I've started to understand when I got into trading, very quickly the thing that's made me successful is that the market repeats itself until it doesn't. In other words, the pattern will repeat itself until it doesn't. The market will make higher highs, higher highs, higher highs, higher highs, and then it doesn't and makes a higher low. And now all of a sudden, the trend is broken. That is a pattern, right? If we are looking at, for example, support and resistance, the market, when it is consolidating, will trade between support and resistance until it doesn't. It breaks out of that range. And so for me, developing those strategies was very easy because I'm good at pattern finding. My whole life I've been a pattern finder. When I have developed business strategies and when I've implemented business solutions, it's all about finding the problem and matching it with a solution based on finding patterns. When I've built online businesses and I've looked at conversion and optimization, it's all been about finding patterns. If I know, for example, that the best customers are age 30 from this geographic location, I can find a pattern in that and I can do something with it. And so I've just taken that, brought it across to trading, and literally that is all trading is. It is finding the pattern, because the pattern, the market repeats itself until it doesn't. So how do you develop those strategies? I don't think the average person should be developing a strategy. I think the average person trying to get into trading needs to learn the fundamental basics of the market and economics. I think you then need to find a very simple strategy that you understand, and with absolute discipline, focus, and dedication, apply that strategy to find out if it works or not. And if it is working, that is something you build off of, right? I think there are very unique people in this world, and I'm probably one of those people, who can look at the market and find anomalies and find patterns and find things that repeat themselves by looking back in historical data. So for me, the way I develop strategies, I look back on data, but I don't back test. I use back data to develop strategy, and then what I do is I forward test those ideas.
Even if you follow your pattern and you understand what the pattern is going to do, there will be one day that it will let you down because it's changing, correct?
Well, yes, and
how do you get around that?
Well, it's very simple. If the market, and I'll use a simple example, if the market made a higher high, higher high, higher high, and it broke to a higher low, you know that is a change of structure, and so therefore you're not following that trend anymore. You're now going to trade off the new trend as long as it repeats that pattern, right? So you want it to repeat this new higher low, higher low, higher low for that to be a new pattern. Now, to answer your question, what do you do when your strategy breaks pattern? What happens if you're in a strategy, you've taken a trade and it's broken pattern? That is why you have risk management. The reason why you have risk management is for when the strategy doesn't work. The reason why you have risk management is for when a trade doesn't go in the intended direction that you believe it's going to go. It has done this for the last couple of movements. It has repeated itself. Now suddenly I got into the part of the trade where it didn't. And if you don't have a stop loss, this is where you get into trouble. If you don't have risk management, and by the way, a stop loss is not the only risk management. We've spoken about this quite extensively. Risk management is also about how you enter the trade. It's about finding better entry points. It is about making sure that when you get into your trades, you know how much you're willing to risk for that trade and not negotiate with yourself past that. Otherwise, you'll end up turning a losing trade into a massive losing trade and potentially even blowing an account. So to answer the question, what do you do when your strategy doesn't work? A seasoned trader will tell you risk management kicks in.
So risk management is actually part of it anyway, no matter...
Before you even take a trade, you should be working on risk management. How much am I willing to put into this trade? How much am I willing to risk as a percentage of my equity, my capital?
R&R, basically?
Well, part of it, I mean, your risk to reward is part of your risk management, but it's where do I take the trade? At what level am I taking the trade? What are my confluences? What are the things that are confirming to me that I should be entering this trade? That's all part of the risk management strategy. Having a stop loss is risk management. You shouldn't be trading without a stop loss. You shouldn't negotiate your stop loss. If you decided that's how much I'm prepared to risk, you've looked at the market, you found a place for your trade to fit into the market where you're probably going to go straight into profit and not into too much drawdown, and you're going to find the momentum of the market. All of that is risk management. The way you place your trade on the table is as much risk management, if not more, than putting a stop loss. A stop loss is a backup parachute. If your risk management goes to shit, your stop loss is there as a backup parachute. And then, of course, the moment you're in profit and your trade is running, you want to move your stop loss to break even, because now you can't lose on the trade. It's risk management. So risk management is, how do you place your trade, your stop loss, how do you manage that stop loss, and more importantly, how do you manage your active trade? If it is getting to an area of resistance and it looks like it's potentially going to retrace, and maybe it's time to take profits. So trade management, trade placement is all part of risk management.
Do fundamental analysis and technical analysis have any impact on your risk management?
Again, we talk about risk management strategies. I talk about how you place your trade being as important as the stop loss and managing the trade. In fact, getting into the right trade is the ultimate form of risk management. If you put yourself in the right trade, the rest of the risk management actually becomes less of a concern, because you've taken the right trade. If you take the wrong trade, then you've got to fall back to the fact that you've got a stop loss. You've got to fall back to the fact of how much you're prepared to lose in the trade, how much drawdown are you willing to accept. So getting into the right trade is critically important. So when I look at that from a risk management perspective, from a trading point of view and a risk management point of view, I always want to develop a directional bias. And I develop a directional bias based on the fundamental aspects happening in the world. So I'll give you a great example. Everything in the charts is telling me that the market is moving down. But I know there are fundamental events happening in the real world right now that is telling me this market has to move up. Let's say someone's gone to war, there's a big economic meltdown that's happened somewhere. Fundamentally, irrespective of the charts telling me that it's going down, I now have developed a bias from a risk management perspective only to look for buys in the market. I'm not looking for those sell opportunities, because part of my risk management strategy is not to trade up against the market. I never want to trade up against the market. I only want to trade with the market. So consequently, I'm not selling, and I may not be buying either, which means I'm not taking a trade, because my fundamental directional bias is it's a buy in this current market, as an example, and so the levels are not making sense to me, and maybe I want that market just to find a level that I'm going to buy off of. So that is my first risk management strategy. My first risk management strategy is to have a solid fundamental understanding of the market, so I can develop a directional bias and use that directional bias to make sure that I only get into trades that put me with the market rather than against the market. So that's the first thing. Then the second thing is, from a technical perspective, absolutely, technicals have an impact on my risk management, because at the end of the day, when I'm entering in a trade, yes, I have a directional bias, yes, I've looked at fundamentals, I've looked at all of these things, but the technicals are representing a true reflection of price action to me. The engulfing setups, below the moving averages, above the moving averages, the relative strength index, all of these are technical elements that I'm looking at. They are diagnostic tools that are helping me enter into a better trade. And equally so, if that trade is moving against me, I need to know what levels I'm prepared to take drawdown to until I'm no longer willing to take that drawdown and get out on a loss, right? So it is essential to combine fundamentals and technicals to make sure that you make good trades. I am not popular for this opinion, and I'll say it very loudly. Technical traders, for the most part, are just gambling. The reason why they're gambling is because they're simply focusing on the charts and they have totally ignoring the fundamental reason why there is pricing on those charts in the first place, which is something that actually happened in the real world, something that is actually being exchanged in the real world, real money moving hands, real fundamentals. That's what's driving the pricing on the chart. Now, yes, you can be a technical trader and you can be successful, but I would argue if you want to go down as one of the great traders, if you want to make sure that you minimize your drawdowns, if you want to make sure that you minimize your loss, if you want to have as little stress in your trading as possible, you need to pay attention to the fundamentals, develop a bias based on those fundamentals, and then go to the charts technically and find a place where you can apply that bias, rather than simply coming to the charts, looking at the technicals, looking at the oscillators, looking at the indicators and going, this is a buy, this is a sell, with no understanding of what is happening in the real world. And by the way, a lot of people have come on my videos and they interpret fundamentals as news. News is not fundamentals. News is sentiment. It is not fundamentals. So when a news reporter writes a piece of content, they're writing something based on something that has happened. When I study fundamentals, I'm talking about the economic structure of the market. I'm talking about what are the central banks doing. I'm talking about what are the global economic factors that are changing pricing on indexes and dollar strength and gold strength and market weakness. I find fundamental data, fundamental elements that look not just at the current, not just at the past, but also the forecast for the future. And I use that fundamental data to help me make better decisions. I look at news purely from a sentiment perspective. If I go and read the last 4 headlines, it's probably the last 5 hours worth of news. 5 hours ago in the news is like an eternity ago in trading. And so I will scan those headlines for a sentiment, but it's not fundamentals.
So where would someone go to find the fundamentals that are not reporting like news, like you said? Where would you go to find the fundamentals?
Well, first of all, you need to know what you're looking for, because there is data everywhere. So you have to ask yourself the question, what are the elements that move the dollar and gold, in my case, which is what I'm trading. If you're trading something else, you'd go and find the relevant questions to whatever you're trading. If you're trading Bitcoin, for example, you need to go and study what are the fundamental things that move Bitcoin, right? So I look at, for gold and the US dollar, I look at the dollar index. I look at dollar parity against other currencies. I go and look at the central bank's policies around the dollar specifically. So I'm dollar bias on one side. I'm looking at everything related to the dollar. I'm looking at, for example, the Fed minutes of their meetings. I'm looking at anything that they're publishing in their dot reports, which is related to how they see interest rate fluctuations over the next while. I start looking at potential forecasting for interest rates and what might be happening economically. I look at inflation data, all of this related to the dollar. Then I go to the other side and I go and find everything that's relative to gold. How much gold is there currently above ground? What is the production increase this year over last year? What is the forecast for production over the next year? Then I go and look at the mining companies that predominantly mine gold, and I look if the outputs that they're putting out in the market are similar to the forecast data. Otherwise, I'm working with bullshit data. I need to see, is the expected output in line with what is actually currently being output, right? So, I mean, if they're expecting 20% increase in output, but the top mines are only producing 6% output at the moment, that is telling me that those numbers are not worth banking on. So therefore, I would ignore that data. Then I go and look at who are the biggest buyers of gold. I look at the Chinese central bank. I look at the European central banks. Of course, I look at the American and Canadian central banks. And I look at those elements and I look at what are their buying policies around gold. I've been calling about a retracement in the market, and I was 100% spot on. I told everyone, nobody listened to me. The gold market shot up almost to 2,800, right? And when I was reaching around 2,800, close to that pricing, I said to everybody, there's going to be a massive, massive sell-off in this market. And nobody Nobody would believe it at the time. Nobody wanted to listen to me at the time. And my fundamental thesis was this. I had read the central bank's buying documents for gold out of China, out of the Asian region, out of the US region, out of the European region, and all of them said the same thing. They were looking for a 7.5% discount on current pricing before they resumed buying. So if the largest buyer of gold tells me in a report that they intend to only resume buying when the price retraces by 7.5%, that tells me the price has to retrace by 7.5% because they're the single largest buyer of gold. And if anything, they're probably going to sell off to create the lower pricing to be able to buy back at, right? So for me, I read those economic fundamental elements. And how do you find those elements? You start with the question. The question is, what am I trading? What are the two sides of what I'm trading? Bitcoin, US dollar. Let me study everything that influences Bitcoin. Let me study everything that influences US dollar and find the correlation. That's how you develop a bias.
So what's an easier pair to trade? That doesn't require that much.
Gold and the US dollar, and the reason why I say it's the easiest pair to trade, because there's very little manipulation there. There is manipulation, but it's manipulation that is controlled by fundamental supply and demand. They can't simply increase the amount of gold. The dollar is valued against gold. Gold is not valued against the dollar. And so if you understand that there is only so much gold in circulation, and you go back to fundamental economics, you understand that you're trading a commodity. I'm actually a commodities trader, not a forex trader. It just so happens that
your commodity is on the chart.
It just so happens that the US dollar and gold is considered a forex pair. But I'm fundamentally a commodities trader, and I understand that commodity. I understand it. I study it. I'm up at 3 o'clock in the morning looking at the charts, looking at the data. Before I place my first trade around 4:30, 4:45 in the morning, if the trade is there, I know everything that is moving price on that moment in that session, right? So to answer your question, what is easier? There isn't anything easier, because that is the most honest, true thing. Now you go to a currency pair like, let's say, Euro USD. They can print more dollars, they can print more euro, and thereby manipulate supply and demand. It becomes harder to have a handle on something that is open to that level of manipulation, which is why I prefer commodities trading. Okay? Then coming back to what you're saying about what I'm talking about is essentially complicated. The last video we put out, one of the videos that I published to, I think it went to TikTok or to Instagram, but the whole combination of it, I think we've had nearly 750,000 views on that video, where I'm saying to technical traders that if you don't understand fundamentals, you don't understand trading, and people are losing their shit and saying, hey, I don't need fundamentals, I make money off the charts trading technicals. And my answer to those people is, yes, you will make money when the market is going in your direction and things are working with you. But if you don't understand the fundamental elements that are coming at you, you're going to end up on the wrong end of a trade, the wrong end of the market, and you will blow an account, you will lose your capital, and you will stuff out as a trader. So the reason why I study fundamentals, I come back to what we spoke about earlier, is risk management.
So in keeping with this risk management topic, let's go to the 2% thing. You are known for saying you've got to make 2% a day.
No, I didn't say you have to make 2% per day. I said the average trader getting into trading should aim to make 2% per day.
Minimum.
At least 2% per day. I didn't say minimum, I said should aim to make 2% per day. There are days when I make 1.8 and I get out of the market. There's days when I make 2.9 and I get out of the market. The point is 2% should be a benchmark. Once I hit close to 2% or above, I get out of the market. Because I have found consistently, it's a pattern that I've found in myself and every trader that I've worked with helping them trade. The moment you push for a higher return, you normally land up sacrificing the profits you've made, which turn into losses. When you push too hard, you land up losing money. When you overtrade, when you take too many trades, when you get into trades that you shouldn't get into because you're now forcing trades because you're trying to get as many reps on the table as possible to make more profit, you're exposing yourself to risk. And again, I come back to risk management. I want to make my 2% with as little risk in as few trades as possible. If I can make it 2% in one trade, I'm out for the day. If I have to make it in 4 trades, I'm out for the day.
2%, right? It sounds, for someone that doesn't trade, it sounds like a small amount. In Forex, it's actually a lot in a day. Am I correct?
Well, I mean, I can only tell you based on the reactions which side the camp is on.
Yeah.
There is one side which goes, there's no ways you can make 2% per day. This is a scam. That's insane. And then there's the other side who says 2% per day, that's so little. You're not a proper Forex trader if you're only making 2% per day. So opinion is completely divided. I don't give a crap about anyone's opinion. I'm simply telling people, based on my actual experience of making money in the market, what I have found to work. And what I have found to work is very simple. Don't risk more than 2% of your capital in trades on any specific day. If I lose 2% for the day, I'm out. If I make 2% for the day, I'm out. And so if I lose 1.9% for the day, it's close enough to 2, I'm out. If I lose 2.2% for the day because I didn't close my trades quick enough, or I didn't adhere to my stop loss rules, then I also am out. 2% is the benchmark. And so I have found consistently that if I risk no more than 2% and I aim to make 2% as a goal as consistently as possible, then I am a very profitable trader. Now, I'll take an example of this month. This month I've returned 61%. Which is way more than 2% per day. Because I also haven't traded every day. This month I made 61%. Last month I made 41%. That was close to 2% per day if I took the number of trading days. So some months I will make more, some months I will make less, but it's a benchmark. Because what that 2% does is it makes you consistently focus on a simple goal. And again, I don't think people understand how I trade and why my trading setup is so unique. I trade a $100 master account. I mirror that out to larger sums of capital, be it through funding partners, be it my own money, my own private equity, be it institutional money that I'm trading. But when I trade my master account, my $100 account, that $100 account, I look for a $2 movement in the market every day. I can pick that up in one $2 movement or 4 50-cent movements, or 2 $1 movements, and I've made my 2% for the day. At the same time, if I go down $2 for the day, I'm out. And what I've found is that trading setup and strategy for me has ensured that I'm profitable in about 85 to 88% of my trades. And most of my trades, I'm averaging a risk to reward ratio of more than 1:1. I ideally shoot for 1:2, but a lot of times I'm getting 1:1.8, 1:1.5. I can't make the market deliver pricing to me. I have to trade according to what the market delivers me. And sometimes I take profits a little bit early because I see the market is starting to run into an area of resistance. And I, from a risk management perspective, pull the profits off the table. And even if that trade runs and would have got me that 1:2 perfect trade, I'm okay with it because it could have done the other thing and turned a winning trade into a losing trade and got rid of my capital and all the gains I've made. So to me, trading is about risk management, it is about discipline, it is about psychology, and it is about focusing on becoming a 2%er. If you can focus on becoming a 2%er, and anybody who criticizes this just needs to go look at my leaderboard inside the Money Tribe, where I've taken people who are complete novices in trading, applied this exact strategy to them, and those who apply it with discipline are consistently making profits to the point where they are now ready to go off on their own and trade actual money.
Okay, so how do you distinguish between a trend and a trend retracement?
Okay, so a trend, so this is a very complex affair, so I'm going to try and make it as simple as possible. Okay, so a trend is the market is moving up. The market has been moving up. Everything tells us the market is going up, it's going up, it's going up. Then suddenly the market moves down. Now, the market moving down can be one of two things. It can either be a complete move in the opposite direction, which is basically a reversal trade, which means the market has reversed and it's gone from being bullish to now being bearish. A lot of traders make the mistake when a market is moving in one direction and it suddenly moves in the other direction to assume that the market has changed structure and that the market is now reversing. A retracement is different to a reversal in the sense that a retracement is simply part of the larger trend move. So I'll give you an example. Market's trading up, it makes a higher high, higher high, higher high. But for it to make that higher high, it also has to make a higher low, a higher low, a higher low, because the way the market works is like a heartbeat. It's got to go up, it's got to come down, it's got to go up, it's got to come down, it's got to go up, it's got to come down.
Big zigzags, small zigzags.
Sometimes the market will do this. It will go straight up, and then it'll come down, straight up, and it'll come down. And people say, well, it's not doing this. It is. If you look and zoom out at the bigger picture, the market is always moving up and down. The market will move up and down to go up, and the market will move down and up to go down. That is a trend. It is a pattern. Okay? So what you need to understand is that you have to have an overall trend. And so the way I develop the overall trend, fundamental bias, I look at the longer term picture in the market. So I look at my 4-hour and my daily and my weekly and my monthly charts, and I understand what is the monthly pattern, what is the weekly pattern, what is the daily pattern. Once I see those, I can then come into the shorter time frames, and I can look at those shorter time frames and understand, is this a retracement move, or has this market actually moved full bearish? And so something I do personally in my trading, I don't know if any other traders do it, I refer to what I call a pivot point in the market. And when I do my market analysis, I have points of interest, so where I think the market's going to trade based on history. And then I also have what I refer to as pivot points. And I know that if pricing breaks that pivot point, if it goes through that pivot point, then the market has shifted structure. So a great example with gold. If we break the all-time high of whatever the pricing is, we've essentially shifted structure. If we come off that all-time high and we break the support structure on the higher time frames of where that market started out that initial trade in that trend, we've broken structure to become bearish. So a trend is the big picture. A retracement is often just part of that trend, but it's a short-term move. The market is moving up to move, down to move up. It's moving up to move down.
What is margin called? Because that comes up a lot. Traders being margin called.
You should never be margin called. So margin called basically means that you have used every bit of available margin to place your trades, or you've placed your trades and you've gone into drawdown, and it's basically eaten all of your money, and you're now at a point where you have no money left and you're running into negatives.
Trading debt, is that what?
Well, depending on the broker, you shouldn't go into debt, but it will. Being margin called means when you get to zero and you have no margin left, you blow your account. Your account's gone, all your money's lost, you're done. You have to come and redeposit to start again. So the only reason you get margin called is because you haven't got good risk management. Yeah. You've taken a bad trade. You've allowed that bad trade to run. You're not trading with stop losses. You've refused to pay attention to your stop losses, and you have no emotional control. The reason why people get margin called is because they have no emotional control. They don't know when to get out of a losing trade. And so there are some other factors, like for example, maybe you were in the right trade, but your lot sizing was too big, and you didn't have enough margin available to be able to live out that trade. You needed to be able to have more margin available to take a bigger drawdown. But you used all of your available margin by going in your lot sizing too big, and so consequently, even though the trade may have been right, you didn't have enough margin for the drawdown that was needed for that trade to go where it needed to go. And so I come back to anybody who's been margin called, you're being margin called because you're an idiot. The only way you get margin called is because you're an idiot. You didn't pay attention to your risk management. You didn't pay attention to your lot sizing. You didn't have a trade strategy that took you out of the trade when the risk became too great. You should never become margin called. If you get margin called, you're a shit trader. Now, there are traders out there who they refer to it as full margin trading. You're a fucking idiot. Anyone who is trading full margin is not trading, they are gambling. Now, I know there's a lot of guys who got trading strategies around full margin trading if you've got very little capital and how to quickly take that capital and gamble it for bigger gains and get there. Here's the problem. If you're a full margin trader and you only do full margin trading, you will never successfully become a full-time trader because you are used to taking undue and unnecessary risks.
Is there an indicator you can use if you know your lot size and where you want to go, that will tell you that your margin, like you'll get margin called here, so you need to stop at.
No, there probably is. I don't know.
Okay.
But I mean, if you're even looking at that, you're looking at the wrong thing. Never risk more than 2% of your equity in a trade. Never. Okay. That's the first thing. The second thing is, if you're going past 2% drawdown, you'll see it. You've got a $100 account. You're $2 in the minus. You're $2 in drawdown. You're burning through margin. If you don't close that trade, and you're allowed to run to 5 to 10, and you lose 10% of your equity, you're allowed to run down to 50% drawdown, you're an idiot. You're an absolute idiot. You're not trading, you're gambling. You're not trading, you're living on hope. You're not trading, you're simply taking a chance. That's why I think if you've been margin called, what you need to do is go and sit back at the drawing board and go, what is wrong with my discipline? What is wrong with my emotional control? Why did I not close that trade? Why did I not have proper risk management in place? If you're being margin called, you're doing something wrong. No trader should be margin called.
If you want to become the best version of yourself and achieve financial freedom, join Money Tribe 21 and be part of a like-minded community. Not only will you have access to Justin Harrison's highly acclaimed Forex course, you will also join hundreds of people who have changed their lives through groundbreaking business, investing in personal development content. Share your progress and have all your questions answered in real time on the Money Tribe app, where members have direct access to the Money Tribe team.
Join the Money Tribe will be the best thing that you've ever done. I've not had a negative day yet.
Double my demo account.
It's practical. Let's keep making profits and making money.
Incredibly well structured.
This is the best investment that you will ever make in yourself.
Don't think about it. Just fucking get it. It's worth it.
Visit moneytribe21.com for more.
Who or what has had the biggest influence on how you trade?
No, nobody. I was really trying to stretch myself for thinking of anything I've read, anything I've come across that's influenced me in any way. The single biggest influence on the way I trade is life experience. It's not a person. I can't think of one person who's given me anything substantial to use and trade with. I can't think of one specific person who's influenced my methodology. I can't think of one specific book that I read because I didn't read books. I think I'm unique to trading because I took 25 years worth of experience in the real fucking world, not some techno geek who has never been punched in the face by life, who's never experienced setbacks and hardships and market cycles, who's never lived through bubbles and crashes in the market. I've taken 3 decades of this shit and looked at it and found a pattern. That's what I've done. And if you're asking me rather than what has had the biggest impact on my trading, it's 30 years of real fucking world experience. Real money, real commodities, real businesses, real customers, being in business in South Africa, being in business in America, being in business in the UK, understanding the complexities of global finance, having traveled to 70 countries, plus 3 decades of that has made me a different kind of animal, has made me a different kind of trader. That's why I have no time for these fucking technical nerds in Forex who believe that the only way to trade is based on the charts. I will take these young guns to some of the best traders in the New York Stock Exchange who don't even look at a computer to this day still. They execute trades from up here. They execute trades based on real world market conditions. They execute trades based on conversations around economics. These kids that are playing with the charts today, 99.9% of them are going to land up broke from trading.
How do you put your health and wellness ahead of making money? Because it is a tough balance.
I'm probably going to have to say that I'm not the best person to answer this question, because for 3 decades of my life, 2 decades, the last 20 years, I've abused my body, I've abused my mind, I've abused my energy levels, I've abused my emotional well-being for the sake of business. I put making money ahead of everything. And a lot of people will disagree with me and hate me for it, and they'll come at me in the comment section and talk about work-life balance. Talk about work-life balance when you're sitting fucking broke in your retirement. I decided to put in the hard yards in the early part of my life. And that meant sacrificing going partying and hanging out with friends. That meant sacrificing being able to go to the gym at exactly 8 o'clock every morning. That meant sacrificing being able to go and do sports with a bunch of mates 3-4 times a week. I chose to put the first part of my life in absolute go get some fucking money mode. And that's what I did. I became fat. I became almost diabetic.
You had burnout.
I had burnout multiple times, got hospitalized, landed up with a brain tumor. And so I'm the worst example because I'm a fucking extremist. When I do something, I do it to the tilt. And so I'm trying to come off that to where I am now and trying to find the balance between how do I do both shit. And so I said to you the other day, I would love to be that guy who goes and surfs at 6:30 every morning, is done by 7:30, 8:30, and comes back to trade the markets. I'm not that guy. I know I'm not. I'm an extremist. I do well when I focus on one thing. Right now, I'm trying to focus on 2 things. I'm trying to focus on my inner personal journey, and a lot of people don't know this when they see me on social media. They think, oh, I have all the answers to everything. I'm still on my own transformation journey. And by the way, long after the most shitty comment is dropped on social media, I'll still be on my own personal transformation journey because I'm always trying to be better than I was. When I'm 90 and I'm still alive, I will still be trying to improve myself because that's who I am. So I'm still in that journey. And I can't answer that question, but here's what I will tell you. I read one statistic that changed everything for me. There are no fat traders in the top 1% of traders. You don't have to like me for it. You don't have to agree with me. Go read the statistic. It's there. There are no fat traders in the top 1%. Why? Because they have to exercise extreme emotional control. And if you can't control what you put in your mouth, if you can't control going to the gym, if you can't exercise choices over the most basic primal elements in your life, how the fuck do you expect to go up against $7 trillion a day with no discipline? So I am saying the reason why my health is falling in line is because I read that statistic and went, if I want to be one of the greatest traders that ever lived, I best fucking start acting like it. I best start doing the things a top athlete would do. I eat right, I sleep right, I exercise right, I take mental breaks, I treat myself like a fucking superstar athlete. And that is the result I'm expecting.
What have you had to sacrifice to be a successful trader?
Whew, that's a deep question. I think probably the biggest thing I had to sacrifice, and this is going to sound very harsh, is I had to stop giving a fuck about what anyone else thinks. I had to start putting me first. Everything I've done up until now has been about a team effort. Build a business with people, get customers, work with those customers, build staff, work with those staff. Everything for me up until this point in my life has been about being a great team player. I had to switch sides and become a total, absolutely maniacally obsessed, self-absorbed, self-focused, completely selfish in my actions and put me first. And again, because I'm an extremist, I went from, kumbaya with everyone to now, hey, I'm a hunter and I'm hunting for me. I'm out for blood for me, not for everybody else. I'm out to make money for me, not for everybody else. I'm out to succeed for me, not everybody else. That doesn't mean I won't help people. That doesn't mean I won't share my journey and my story. That doesn't mean I won't help my partners to try and achieve a level of success close to what I'm doing. I, of course, will do all of those things, and that's why I've started the Money Tribe. That's why I'm teaching in the Money Tribe. But make no fucking bones about it, I'm in this for me and me first. I make money from trading. I don't make money of anything else. I make money of trading. I've made money in business and I'm still making money in business, but nothing like what I'm making in trading. And when I smell blood, I go in for the kill. I'm in this for me.
Do you think if people behave a certain way with money, for example, if I'm an excessive spender or I'm an emotional spender or I'm an excessive saver, do they behave a different way on the charts?
For sure. I think that the trading is going to bring out exactly who you are. And I give the example of what happened to me when I started trading. I traded demo, fucking printing money twice. Thought, hey, this is incredible, right? Put real money in the market and just got my ass handed to me. I knew how to trade. What was the problem? I was setting my stop loss so close on my trades that I was getting stopped out all the time. You know why? Because I was scared of losing. Because I'm an obsessive, compulsive saver. Because I'm an obsessive, compulsive investor. Because I'm an obsessive, compulsive accumulator of money. I just couldn't handle this idea of losing money. But in trading, you have to understand the price of entry is you have to take some drawdown in some of your trades for it to go make profit. That is the cost of goods, the cost of sale. It is like having stock in your shop. You need to be in the trade, and sometimes that means you got to go red before you can go blue. I couldn't get that at first. At first, it was my biggest obstacle to entry. And once I realized the thing holding me back, it's not that I couldn't trade, it's that I was scared of losing money. I had to just let those trades breathe a little bit more. Be prepared to risk a bit more money. I started smashing the trades. And so if you're greedy and you get into profit and you hold on to those trades for too long because you want to make more money, what's going to happen? It's going to retrace. It's going to take you out of your trade. You're going to turn a winning trade into a losing trade, and you're going to lose money. What you do with money and who you are with money is going to come out in the charts exactly to a T who you are. That's why I can tell you exactly what kind of trader you're going to be by just asking you some basic questions.
What are the common misconceptions about traders? There must be a few.
I think there's a lot of fucking misconceptions. I think one of the biggest misconceptions is that Forex trading is a scam. And I'm the guy who said Forex trading is a scam. If you go back in my content, long enough ago, I said this is bullshit. Why? Because I lost money trading. And I think this is why I deeply understand people who come and criticize my content and say, oh, you can't be making that money. You must be a demo trader. You must be this. You must be that. People got all kinds of fucking stupid comments. Just because they haven't succeeded at trading means that I can't succeed at trading in their minds. And I know because I was there. I fucking lost R500,000 trading. So these guys must be scamming. But you know, there's no ways they're making money if I lost money. And so I think the first misconception is that Forex trading is a scam. Forex trading is not a scam. A lot of people in the Forex industry are scammers. There's a very big difference. Okay? Anybody who is worth their weight in gold, excuse the pun in the trading community, will be able to articulate themselves about trading and be able to pass on in conversation exactly how they trade and what they're trading and what the thing is and how it works. Most people promoting Forex courses and Forex signals and fucking all the other bullshit Forex robots, ask them what is Forex. They can't even give you the definition of Forex. So Forex trading is not the scam, it's the people that are the scam. That's the first thing. The second misconception is that there is no work in Forex trading. There's this, it's easy, you just press buy and sell in 10 minutes a day and you're making money. That's why everybody's so lured to it. The reason why people all come rushing to Forex, the reason why everybody wants to be a trader is because it's been sold as this concept of easy. Just hit buy, hit sell, take the right direction, you're making money. And whilst that is true in execution, in practice, what people don't see is the 8 hours before I make my trades. What people don't see is the hundreds of pages of data that I comb over. What people don't see is the collective data set that I study. What people don't see is me up at 3 o'clock in the morning, working on my market analysis and trading plan for the day for 4 hours before anybody even wakes up. What people don't see when I post my profits and show that I've made $7,000 that morning while they were on their way to work is that while they were fast in bed sleeping next to their wives and their husbands, I was working. The misconception is that this is easy. It is not easy. It requires work like anything. In fact, I will tell you, trading is the least passive thing I've ever done. I run online businesses that are very passive. I run businesses that don't require me to be there all the time or do anything. Those are very passive. Trading is not passive. And anybody who tells you trading is passive is talking bullshit, which comes to the next point, that trading is passive. Trading is not passive. You have to be on the charts. You have to be on the economics. You have to be on the data. You have to be a trader. A trader, it's work. What I love about trading is that you can do it from anywhere. Doesn't care about who I am. I'm not having to, go and convince somebody else to give me money. I'm taking my money from the market based on this. It's me against the market. And I think the other misconception is that every trader is a multi-millionaire. I want to point out that I am an absolute exception. Not because I say so, because my statistics say so, because my numbers say so, because I've become an institutional trader because of those numbers, because I've become a highly funded and accredited and acclaimed funded trader because of my numbers. It's not me saying it, it's a statistical fact. I am an anomaly in the trading world. And the reason I'm an anomaly has got to do with natural talent, it's got to do with my obsession around numbers and money, and it's got to do with 3 decades of actual real-world life experience. So when some young buck comes and buys a $49 course and thinks he's going to be like me, he's probably going to have a rude awakening. Life requires you to have a certain skill set and a certain amount of experience to be where I'm at today. And a lot of people are criticizing me saying, but you haven't been trading for that long. No, I haven't been trading that long. But guess what? I've been a lot more fucking profitable than a lot of people that have been trading a lot longer than me. And that's what counts. What counts is profit. Not how long you've been in the game. I know traders who've been trading for 7 years and haven't made profits. And that brings me to my final point. That every trader is profitable. Let me tell you, most traders are unprofitable. Most traders are unprofitable. 78% of traders going into retail trading are losing money. Which is why, again, I get criticized for this. I've started this demo trading boiler room inside the Money Tribe where we apply real world conditions. We manipulate and manufacture the pressure of trading real money by doing very specific things in the competition. And we create a boiler room where people don't have to lose real money, and to figure out if they can actually become traders, go through the comps, if they're regularly finding profit, then start trading real money. And again, I'm able to do this because I'm an anomaly. I'm not like everybody else.
So you were saying that trading isn't passive, and that comes to my next question, which is, can you burn out from trading? And the reason I ask that is because it's painted as this one ticket. If you just learn Forex, you're free. You can do anything, you can go anywhere and just enjoy your life, because attached to trading is this life of wealth and easy living. But I know from what I've seen with you that you're probably closer to burnout than any other thing.
So, in life, it is a weighing machine. You give up something to gain something. That is life. As a Forex trader, the charts are part of your life. The data is part of your life. The news is part of your life. The global economic structure of the world is part of your life. You're no longer a happy, blissful idiot. You actually need to know what the fuck is going on in the world. Okay? So that is the part you give up. You give up the part of being able to go sit on a beach and stare at a fucking palm tree all day and go, the world is wonderful, let's do yoga.
That's my job.
That shit's gone. That shit's gone. Okay? Can you reach burnout? Will you reach burnout? Absolutely. My CPU, my brain, runs so hot every day, literally, that when I get on the couch in the evening, I pass out. Completely gone. It requires an extraordinary amount of concentration and skill set and discipline to make the kind of money I'm making. Now, is everybody trying to make the kind of money I'm making? They shouldn't. I've got a unique goal. I want to become the greatest trader in the world. When you go for fun and play basketball with your mates on the court, you're having some fun. You're not trying to be Michael Jordan. I'm trying to fucking be Michael Jordan. So there are some people, I believe, that could successfully go look at the fucking palm tree for a couple of hours a day and do some yoga and be relatively successful traders. They won't compete with me. Because I am training and doing reps at Michael Jordan level. I want to be one of the greatest. And so I look at this and I go, how do I manage myself like a super athlete? If I was Michael Jordan and I train for 6 hours in the day, I have to go have downtime. So you've seen me. I make sure I go for a walk. I make sure I go to the gym. I make sure that I go to the beach. I make sure that I'm on the couch at a specific time at night and I switch off from everything. I put everything away. I don't look at my phones. I don't look at anything. I get off it. So I'm not even replying to social media fucking stupid comments anymore because I don't have time for this shit. I'm now looking after me. I'm taking downtime. I put 14 hours a day in. It's now time for me to step away and relax. This podcast, believe it or not, is a form of relaxation for me because I'm not on the charts. When we go out to lunch and dinner, it's an absolute form of relaxation because I'm not on the charts. I'm detaching from it completely. But when those charts are open and I'm focused, my brain is working and computing. I'm calculating every possible potential trade. I'm looking at every possible potential outcome. I'm looking at all the risk factors, all the upside factors. I'm looking at where I can take trades and where I shouldn't take trades. It does not stop. And so, yes, you can reach burnout, especially if you're at my level. And so I think things like taking time out, going on holiday, traveling, doing activities that are fucking totally away from screen time, I think is super, super important if you want to be a good long-term successful trader.
Has your relationship with time changed since
Absolutely.
you've been on?
Absolutely. I don't fucking give my time to anyone. I used to willingly give my time to people. People come and talk to me. People come and drop something off and I give them 20 minutes of a conversation. I go to the beach, somebody catches me, I'll give them 30 minutes and a coffee. We'll go somewhere out to dinner and somebody will want to take a picture with me or want to talk to me, want to have a conversation with me, and I usually give them that time. Now I give nobody my fucking time. You know why? Because I am in absolute beast mode. I have no time to give to myself, let alone anyone else. And I know people watching us are going to go, this guy, he's so obsessive, this is not healthy, blah, blah, blah. I already know all the dumb shit that's going to come out of this. If you want to go learn from an ordinary person, you will get ordinary results. I am extraordinary because I apply an extraordinary effort. I will outwork anyone I come up against. I will outthink anyone I come up against. I will apply myself harder than anyone else. I won't give up. It's just who I am. I have an obsessive compulsive disorder to win. And I feel sorry for anybody who's offended by that. I can't change who I am, and you can't change who you are. But then don't criticize me for being who I am, because I'm not criticizing you for being who you are. I'm simply saying this is me, and this is the way I'm wired, and this is the thing I'm going after. And I love it. I'm so in love with trading. I'm so passionate about trading. I'm more passionate about trading and making money than I am about anything else in my life. I love it with every breath I have. I wake up in the morning and I can't wait to trade. I wake up in the morning, I can't wait to see the patterns. Everything else in life is so boring to me. And so I give my time to this. And obviously I've got to carve out time for you guys and the kids, and I've got to make that time available, and I don't feel a single fucking ounce of guilt for the time I'm putting in right now. I don't feel a single ounce of guilt, because the life I'm leading us to will be a life that most people could never imagine.
Thank you for joining us on this episode. We hope you enjoyed it. Remember to hit the like button, the subscribe button, and leave a comment if you'd like me to ask Justin a question. And we will see you on the next episode next month. I have a question. You know, when we go on our dates, like tomorrow, where are we gonna go?
Why?
Because we can't just eat anything.
We're gonna go to the beach with a bottle of water.
So romantic.
I'm not throwing out ketosis again.
So we're never gonna go on a date again, actually.
We will.
What's a date to you? We sit on
Being
the beach
together.
with water. Being together. We're together now, so this is a date.
Does a date mean eating?
Yes, like 100%. If you ask most people, what's a date? It would involve some form of eating.
So going to the movies is not a date.
It is, because you eat popcorn.
Going bungee jumping together is not a date.
It is, because after you bungee jump, you'd have something to drink or eat. It's a yin and a yang thing. So we can go to the beach with a bottle of water, and then what?
I'm not breaking ketosis.